You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional-grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody. That music means we are back once again. It is Wednesday. It is time for the hottest futures program. Lighten up the charts. Yes, it is time once again for the Futures Rundown. My name, of course, Mark Longo from theoptionsinsider.com. Back live with you this week. You got a Futures Rundown last week, but we weren't live, of course, because I was down getting the scoop on all things futures at the big Futures Industry Association conference. So, excuse me, if you missed it or just didn't have a chance to check it out, I know many of you are busy, don't have a chance to head down to Boca this time of year. I did a rundown of all the interesting new developments and up-and-coming things in the world of all things futures. You can check that out over there on the Pro, theoptionsinsider.com/pro. Also get you an awesome Pro Q&A. We just did yesterday with our good buddy, Mr. Bill, talking about a lot of crypto as well as traditional assets. And then, of course, it gets you options oddities at the end of every week. Once you go hit that sign-up page, of course, it'll get you access to nearly 500 episodes that are waiting there for you. So a lot of good stuff waiting for you the second you hit that join button, including giveaways, live streams, all kinds of fun. theoptionsinsider.com/pro. As we see who's joining us on the old Futures Rundown program this week, I'm pleased to welcome back on our old pal, Miss Carly Garner from DeCarley Trading. Carly, welcome back to the Futures Rundown program.
Thank you, Mark. Should be an interesting day today. Things are moving.
Things are moving indeed. So let's dive right on into the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, welcome to the Trading Pit, the portion of the show where we see what's lighting it up out there this week on the futures front. Carly, as you mentioned, a bit of a spicy one We're back in that new regime where it's what did the White House say today and what are the subsequent moves we're seeing in the market. Could be in the equities, could be in volatility, could be in tariff impacted markets like the ags and FX and you name it. Just a lot of factors driving all markets these days. So that said, Carly, before I dive into what's lighting it up this week, what is catching your eye out there in the world of futures this week?
Well, as you said, there's a lot of uncertainty out there. Regardless of what political spectrum you're on, I think we can all agree that it's you can't dig your feet into any one idea because things change so fast. It's very exhausting. On the brokerage end of things, I can tell you I'm very, very tired. I need a vacation from 2025, and it's only March.
That's a good thing, though, right? The phone's ringing, the contracts are flying. Is that not a good thing when you're a broker?
No, the volume and volatility it can be good from that standpoint, but the reality is, a lot of people, there's a lot of people that weren't trading from 2006, the first Trump, let's just call it Trump 1.0. I think that's the accepted term. So there's a lot of people that are being caught off guard and they're not used to this. And so it's been a surprise for some, but I think everybody's kind of getting into the swing of things and trading a little differently as far as risk management and things like that, because you simply have to.
Our chat is saying they're betting you're slinging a lot of nat gas right now. Is that the case, Carly? You getting a lot of calls for nat gas right now?
We do have some nat gas traders, and that obviously at any time we do. But we're actually things are pretty rocky. We have some risk reversals on, so not futures. We're trading the options, sold calls, bought puts, and they're doing fine. But today's not really what I wanted to see. I wanted to see us break support, and we failed. But I think tomorrow's a new day. We'll have to see how it goes.
A new day indeed. It's a new week as well, so let's dive into it, listeners. Let's see what's dominating the tape to the upside this week to start. We'll do a top six, actually, because you'll see the top two are pretty much the same thing. So it's a bit of a cheat. But number 6/5 this week, listeners, is our old pal gold, the April gold contract. Looking robust again. Go figure. We get a little topsy-turviness in the broad equity markets. And you're going to see gold hit some new highs, which it did. Everyone's been watching for this magical, mythical 3,000 level. Did finally hit it recently. Gold up about 3 1/3% this week. Number 4, listeners, /5 really in our list this week, is our old pal hard red wheat. The May contract up 3.8% this week. Number 4/3, we've got our good friend sugar, number 11, the May contract. It's a sweet week, listeners. Sugar up about 4.3% this week. And then number 3/2, listeners, our old pal high grade copper. We were just talking about this on the show recently. Obviously a lot going on in the realm of copper. Whenever you talk copper, you always have to talk Chinese economy, Chinese demand as well. So very much a bellwether for that. The May copper contract this week, listeners, up 5.2%. And then number 2/1, because they're the same product at the end of the day, we have the micro and the big ether futures, both near dated, both the March contract up 8.57 and 8.68%. respectively. Now, you might be saying, woohoo, if you're an ether bull, you've been waiting for some actual green on the screen for some time, but don't get too excited. Just to give you a little bit of a spoiler for later on. Year to date, the ether future is still off 40.6%, so they could gain back 8% a week for the foreseeable future and still take a while to gain back everything they've lost this year so far. I hate to throw cold water on you out there, but that's just the facts. Carly, anything catching your eye out there in our upside movers this week? Well,
I'm ashamed to admit that we are on the wrong side of the copper freight train. So I haven't given up yet, though. I still think that give it a couple weeks and we'll be heading the other way. My thought is, there's a lot of technical reasons that I think copper is probably going to run up out of buyers here around the all-time highs. But the reality is, if you look at other markets, economic stability might be in question. Inflation seems to be tapering, or at least that's what stocks, bonds, and most other commodities are pricing in, yet copper is doing its own thing. So we'll see how things pan out, but I suspect we're running stops above all-time highs, luring in all the last of the trend followers, and we should be running out of steam here in the next 5 to 10 cents. But then again, sometimes I'm wrong, so we'll see.
Speaking of economic developments, the Fed announcing as we're talking here, listeners, widely expected to keep interest rates steady, and that's exactly what they did. I don't think I've seen the Fed watch this unanimous in quite some time. 99% saying they were going to hold things steady. Interestingly enough, hinting at maybe still seeing 2 cuts to come this year. So the market's clearly liking that as we're recording now. The S&P up about 1.75%, NASDAQ up about 2.33%, Dow up 1.4%. Of course, we were talking about the metals before, in particular gold. Gold not just hitting 3,000, but hitting a new all-time high just yesterday of 3,045. So interesting stuff out there. Carly, I know you were talking a little bit of smack about gold of late. What are your thoughts of its performance of late, Carly?
Hey, gold is a runaway train, but I've seen this before. This is the markets, the metals markets are reacting and behaving a lot like they did in 2011. It seems like there's no end in sight to the rally until there is. And when there is, it's probably going to end very, very poorly. If you look at sentiment readings, 75, 76% of industry insiders are bullish. Speculators are overloaded. It's a really, really overcrowded trade. I don't know where it ends. I suspect we're probably within $100 of an end in the gold rally. Again, the last time gold behaved in this manner, and all the same stories were circulating, literally all the same things. Central banks are buying, fiat money is trash, so on and so forth. That was 2011. And at that time, we had a 45% correction that lasted a decade. I don't know if we get that, but just to put things into perspective, a 45% correction would put us well below 2000. We're talking like in the back in the teens. So again, I'm not saying it happens. I'm just saying if you are long gold and you're doing well, congratulations, but be careful, trail stops or hedge it in some way, because if the rug does get pulled, it can get pretty nasty on the downside.
You're saying it might be a good time to put a few collars in your back pocket out there.
Good idea.
And gold out there. Let's see. A good subject maybe for TWIFO tomorrow, listeners. It's not all sunshine and rainbows on the show, listeners. Some stuff has to go down. Let's get there. Now, I hope you're hungry and or thirsty when you're looking at our downside movers this week, listeners, because that's what we got, including number 5. We're kicking things off in dairy. The lactose intolerant person within me doesn't like seeing this, but nonetheless, it's there. Cash settled cheese. The April contract off 3 2/3% this week. Right above it, it's a dairy apocalypse this week, listeners. Number 4, we got class 3 milk, so you can have some cheese, wash it down with some class 3 milk. Also, the April contract off slightly over 4%, 4.04% this week. Number 3, you can't eat this, but it's been in the headlines nonetheless. It's U.S. Midwest Steel, the June contract, so a little bit longer term here, off 4.57%. And then if you want to wash down all that dairy with some OJ, we got you covered with number 2. Good old OJ, the May contract, off 6.25% this week. And then the big loser this week, I'll probably talk about this some more on vol views this week. I'll have to look and see if I'm filled on my UVIX to the downside here. We'll go see, getting out of it. It is the VIX coming off hard this week, off 8.33% in that April future. Again, when things get lofty, when vol gets super spicy, if past is prologue, it's probably going to come back down again, especially like it is right now post-Fed. So a lot of vol erosion. Carly, what is catching your eye in our downside movers this week?
Well, I'm noticing the VIX crush that we've got going on, or the volatility crush, and that's to be expected. We had last week, we were seeing stats like the largest put to call ratio ever, or at least in the vicinity of it. So in other words, everybody was loading up on puts. Everyone was all bared up in the stock market last week. It's reasonable to see for people to panic when you get a little bit of a correction. But when everybody starts thinking the same thing is when the market, market gives you a little sense of reality, and so I think that's kind of what's going on. But I don't think the trend is over. My best guess is the S&P's bouncing, and that's amazing for most people in their portfolios. But I think that we're probably going to run into some pretty good resistance, a little over 5,700, and the selling may resume. We'll see. I might be wrong about that, but I think that's the case. I'm worried about in addition to everybody buying puts after the fact, instead of buying puts when they should have been, they were buying puts for insurance after the market had already sold off. I suspect there were probably a lot of retail traders that were selling puts as a position, premium collection, or at least that's the sense I'm getting talking to people. And I think that could be trouble if we do have another leg down. People might get into some trouble there.
Let's see what kind of trouble we're getting up to out there in the futures markets today. What's lighting it up? Remember, they took this snapshot right before the Fed announcement, so could be changing a little bit right now post-Fed. Let's do a top 15 just for fun, talking about Carly's favorite contract. Yes, it's April Gold, 123,000 contracts on the tape so far today. I got to imagine a few more of those have popped in post-Fed. Number 14, we got our old pal, the Japanese yen, going all the way out to June this time, 144,000 contracts there. Number 13, the Ultra T-Bond, also out to June, 161 on the tape. Number 12, back to FX. It's the Euro FX contract, again, June, 170,000 contracts on the tape. Number 11, our first sojourn to the Ags, it is corn. The May contract, 173,000 contracts on the tape. Breaking into our top 10, we kick it off in the equities. It is the Russell 2000, all the way out to June once again. That's an eternity in the equities where everything is 0 day and near dated now. All the way out to the June future. Russell 2000, 178,000 contracts on the tape. And the number 10 spot, listeners. All right, number 9, we've got good old crude oil, our old pal WTI. The May contract this time, 238,000 contracts on the tape. Slightly above it, coming in at number 8, we got 239,000 of the 30-year, going out to June again this time. Number 7, keeping it in the rates as it is a Fed day. It's the Ultra 10-year, the June contract, yet again, 319,000 contracts on the tape. Number 6, back to the equities we go. I'm getting a theme here today, listeners. It's Fed day. You're going to see a lot of rates and a lot of equities. Number 6, it's the NASDAQ E-mini. 397,000 contracts on the tape for the June contract. Number 5, our old pal, 3-month SOFR. Once again, going all the way out to the end of the year. This has been a theme for this product we've seen pretty much every time it's been in our top 10, top 15. It's always going out to December. That's just the trade in this product. 564,000 contracts on the tape. By the way, if you're intimidated by 3-month SOFR, Carly and I did a deep dive into its contract specs early on in this program. So if you're up for it, check it out. It's a wild ride, but I think you'll be better for it at the end. Number 4, keeping it in the rates. It's the 2-year, June once again. In fact, everything else we're going to talk about today, all June all the time. A lot of June love on the tape today. June seems like an eternity away from right now, but you know, that's the quiet period of summer. My brain can't go there yet. Yet that's where the futures markets are hanging out today. The 2-year, number 4, 623,000 contracts on the tape. Number 3, it's the 5-year. So splitting the difference, we go 2-year, then we go 5-year. What will come next? I guess we'll find out down there on the yield curve, listeners. It's 850,000 contracts on the tape for that. Number 2, our old pal, the S&P E-mini, 1.07 million. And the big dog, again, right before the Fed announcement, it was our old pal, the 10-year. So carving up the curve, 2-year, 5-year, 10-year, all sorts of parts. Even the 30-year making it in there. The curve all over the place, including number 1 today, listeners, the 10-year note. 1.2 million contracts. Carly, any surprises or interesting nuggets in there for our most actives today?
It's pretty reasonable to see the financials at the top, especially on a day like today. But what catches my eye is 238,000 crude oil contracts traded. I mean, what are these people doing? They must be day trading or scalping, because the oil market's been in a $3 range for 2 weeks. I'm not even sure what to do with oil. So I think that's interesting that people are still churning that market with prices going nowhere. And I'll end by saying crude oil never stays quiet for long. So just be careful. If and when we ever break out, it's probably going to be substantial. My best guess is it's going to be to the downside, but only time will tell.
Just a reminder with our volume listeners is we try to pull out the micros, so you're not going to see any NASDAQ micros or S&P micros in there, which would probably be at 2 and 4 if we just looked at a pure contract volume. But again, very bite-sized contracts, so we try to remove those whenever possible. Again, we're still early in the year, but we're already seeing some wild trends shaping up, and of course, some products having excellent or terrible years already just by about midway through March. Let's break those down right now, some quick year-to-date movers, and we'll get into a hot new product that I know a lot of you are very interested in right now. I know our chat was. They were talking about it earlier, so we'll get there in a second. But first, let's go for our big year-to-date movers. Let's go to the upside first, just to keep the sunshine and rainbows going. It's our old pal Carly's favorite again. It is gold. Gold having a good year so far, up 14.25%. Number 4, right behind it, Carly's other least favorite product. In fact, we had to have Uncle Mike on the TWIFO program a couple weeks ago just to rebut her claims that silver are where good trades go to die. Nonetheless, it is silver. Number 4, listeners, this week up a little over 16, about 16.07%. So far, again, these are year-to-date numbers, listeners. Number 3, I got bad news for all you latte fans out there. Coffee, still looking pricey, up nearly 25% so far year-to-date, 24.87. So no discounts on your lattes and cappuccinos over there, at least not quite yet. Number 2, it's our old pal copper, 25.67% to the upside. And then number 1, Carly's favorite, good old nat gas, up 33.75%. Carly, it's been a wild year for the Widowmaker, a wild year for coffee. You already touched on copper, but also your beloved silver having a wild year, Carly.
Absolutely. I mean, it's not boring. Let's put it that way. I think it will continue to be not boring throughout the remainder of the year. My big overall theme is I think that, we came into the year worried about inflation and all the things that come with that. And keep in mind, when inflation's high and people are worried about inflation, what they do is they try to hedge their bets by buying commodities. Not everybody, but some of the people with deeper pockets or more sophisticated attempt to buy corn, soybeans, natural gas, crude oil, whatever it is, to hedge their inflation risk. And I think if expectations on inflation continue to come down, as I expect, that's going to pull a lot of money out of the commodities, at least from the long side. And so I'm expecting most commodities will be sell rallies, but as we're seeing already in the first 3 months of the year, these rallies can be very, very big, and you want to be very careful getting caught. It's better to miss a trade than to be in a trade wishing you were on the sidelines.
You might be wishing you avoided these trades unless you were heavily short, listeners. Let's go to our year-to-date big losers. And number 5/6, we had to go 6 again because we have 2 that are, again, identical. I bet you can guess by now what they are. Number 6/5, it's one of the EMs. It's uranium, going all the way out to September this time. Off nearly 14% so far for the year, 13.7%. You've seen that reflected in a lot of the big uranium stocks you folks like to trade a lot out there. CCJ and others also having, let's say, a rough start to the year. So uranium coming in at number 5/6, number 4 out there really, /5. It's our old pal Dry Whey, again, keeping it in the dairy side. March contract off 23.71%. Number 4/3, it's cocoa, going out to May off 26.2% so far year to date. And then number 3/2, because they're the same product, it's the big and the micro ether futures, both off, as I revealed earlier in the show, 40.6%. So again, for everyone who came into this year thinking, okay, this is the year, ETH's going to make up for lost ground on Bitcoin and Solana. It's going to outperform. It's going to do well. Not so much the case, off 40.6%. Now, that said, there wasn't really a robust Solana futures market. That has changed this week. We'll get to that in a little bit. If you put Solana into this mix now with an actual future, I think you would see it's actually off more. It's off over 50% year to date. At least, maybe not year to date, but from its highs, it certainly is. I think the high was around January 18th. So pretty close, exactly 2 months. So that might change the game now that we have some actual listed futures we can sink our teeth into there. Spoiler alert for our next segment. And then the number 1 loser on the year, listeners, it's good old OJ, off 45.33%. So I guess if there is a bright spot, Carly, your coffee's far more expensive in the morning, but your glass of OJ almost half the cost.
Yeah, that's been an amazing thing to watch. I'm not surprised that orange juice fell as far as it did, but I'm shocked that it did it as quickly as it did. And it's a really stark reminder of just how dangerous commodities can be, and how even when it seems like the boom bust cycle is being avoided, it's not avoidable. I've never seen a commodity go through a big boom and avoid the bust. It's inevitable. We're probably going to eventually see it sometime in feeder cattle and live cattle, although they've also been kind of defying gravity. But I feel like the end game is going to be something like what we just saw in orange juice. On a side note, orange juice was pretty beaten down yesterday. We had the idea of maybe trying to nibble on the upside. You wouldn't want to buy futures in this market. They're very, very thin. I mean, you could, but it's not for everybody. They're very thin. You can get locked limit moves all the time. So we were looking for options, and the options were wildly expensive. So it's probably a market better to just paper trade or follow mentally, maybe not actually put your money in, because it's a really treacherous market.
Well, speaking of treacherous, this has been a wild one as well. And there's a new hot product lighting up the tape. We don't get to say that very often in the futures markets. Let's get to it now. A much anticipated contract spec segment.
Have you ever looked at a futures product and said, "What the heck is that?" Let's find out together. It's time to get the contract specs.
All right, listeners, let's get the contract specs. And it is exciting to have a new future in our hot little hands. And not just any future, not some random addition to something that no one asked for or heard of. This is a hot one. This is a hot product that a lot of you are interested in. We see it over there on our crypto rundown program. It's been quite the mover. This year, it's been mostly moving to the downside. What am I talking about? Of course, I'm talking about Solana. This has been definitely in the top of the futures, or I should say of the crypto market for quite some time from a market cap perspective, even though right now coming back down the other side, still in the top 10, but not threatening the top 3 like it was not too long ago out there. So CME obviously seeing that they already have listed Bitcoin, the big and the micro, as well as listed Ether, also big and micro. And they followed that up this week with the launch of Solana Futures, also a big and a micro. So before I get into the specs, Carly, I'm just curious, off the top of your head, what are your thoughts of this? Does this excite you, or any of your clients calling up saying, hey, I need to get in on some of that hot Solana action?
We haven't had any clients interested in trading this yet. I'm sure it'll come, but that's kind of par for the course. When the CME first listed Bitcoin futures and then later Ether, these products took a lot of time to build up interest, and so I expect this one to be the same. I think with time we'll get some action, but it's going to be a process for sure.
All right, well, maybe Carly's client should listen up too. We'll drive some interest here, Carly, for you. The phone will be ringing off the hook after the show. So what are we talking about, listeners? Talking about Solana Futures. You might say, first off, what are these things settling to? This is what CME always does with their crypto contracts. They create these reference rates and partnership with another firm. And then they have this reference rate. They have one for Bitcoin. They have one for Ether. Now, of course, they have one for Solana. They actually disseminate some others as well. So if you want to see maybe a roadmap of what other products they could be adding in the crypto landscape, go check out the page over there at CME. They'll show you all the other reference rates they're currently calculating and disseminating, so you can maybe see what might be coming next. So this does settle not to spot on one particular outlet, but to the actual Solana reference rate. Coming in 2 sizes again. We got the big and the little, or as they put it, the regular, and then, of course, the micro, even though they throw that term micro around quite a bit over there at CME in all different sizes. So it gets a little bit confusing. Let's start with the big contract first. This is for the big boys. This is for the institutions. This is for the folks who are maybe looking to launch Solana ETFs based on the futures down the road, like we saw with BitO and we've seen with others out there. Why? Because it's huge. It's 500 Solana. So when we were crunching this, Solana was at 124. We'll have to go look, see it where it is right now. Let's see if it's rallied quite a bit out there. It's up to about 132 right now. But you know what? For the purposes of we'll tell you what, we'll update everything to make things even more accurate for you folks, listeners, because it was around 124 when we did this. So that gave it a notional value of the contract of 62,000. That is now at 132, up to $66,000. So again, a big boy contract out there, listeners, not for the faint of heart. The minimum tick size is going to be pretty much a nickel, 5 cents out there. Obviously, there's 20 ticks in $1 of SOL. So your tick value out there, if you want to just look, a nickel times the multiplier, that's how you do it. Nickel times 500, that works out to a change in the value of your future, listeners, of $25 for every tick. So every nickel of Solana is going to equate to $25 plus or minus for every future that you're long or short, listeners. By the way, should mention, these are all cash settled products, so you're not settling into Solana somewhere. You're not getting the old proverbial truckload of Solana dumped on your lawn. And then we have the micro size contract. That one is 25 SOL, listeners. So obviously a much smaller contract. So at a price of 132, you're talking about $3,300 worth of notional value out there per contracts. Obviously designed for a lot of the retail folks who are listening to a show like this, even though I know we have a lot of institutional fans floating around out there as well. Whichever size you like, pick your poison. Tick value, same thing, going to be a nickel. So nickel times 25 is going to cost you or make you $1.25 with each tick per contract, listeners. And again, cash settle for this one too. So there's your initial offering, Carly. We got the big 500 boy contract and the more bite-sized 25 Solana. What are your thoughts on these two contracts and their sizes and maybe use cases, Carly?
Well, I'll be, this is outside my wheelhouse. Anything crypto, it's definitely not my expertise, so my opinion means nothing. But I will say I'm a little worried that maybe the micro is a little too micro. We run into this with the Ether contract. It's so small that for traders to get any leverage and anything moving in any real kind of way, they have to put multiple contracts on, and then the transaction costs really eat them up. I know the exchange fees are discounted for the micros because of the size, but for most clearing firms, their costs are the same, whether you're trading a micro or a big or whatever the case is. So it's one of those things where it's almost impossible to lower the transaction cost enough to make the micros that small easy to trade for somebody in any kind of meaningful way. So I worry about that. I could be wrong. Like I said, my opinion means nothing in this sector.
I think it means quite a bit there, Carly, out there. So interesting stuff. Like we mentioned, $25 per tick out there, listeners. So let's say you bought a big Solana future right now and it dropped from 132 to 131 where it closed at the end of the day. So you lost $1 on your Solana future. Obviously $25 a tick for the big contract times 20 ticks, a nickel into $1. Obviously there's 20 of them. So that's going to cost you $500. That's what you're going to lose per every one lot of futures that you are long. Of course, if you're short, congratulations, you just made $500. The micro size contract, same deal, same math, just you're going to change the multiplier there. So you drop from 132 down to 131 again. So you're going to lose $1. But in this case, you're multiplying a nickel times your multiplier of 25. So a little bit of a different contract out there. So now you're talking a $25 loss versus the $500 loss. Or as Carly puts it, too little to get her clients interested. They don't get out of bed for $25, Carly. So let's look at some other headlines and some thoughts out here. Obviously, this just launched on Monday, so it is very new. If you pull up Solana Futures, you're going to see a variety of opinions out there, Carly. People are already celebrating this as a triumphant launch, or they're writing it off as a flop. We just did a quick search coming into the end of the first day, and just looking here, did Solana Futures flop? Yes and no. CME launches, they expand derivatives, offering futures finish first trading day. But a lot of headlines all over the place on this stuff here, listeners. What's the truth? The answer is it's kind of off to, I guess, what you would expect for a start for a CME crypto contract. None of these contracts have really lit the world on fire yet, so I don't think anyone was expecting Solana to leap out of the gate. They put up the first print actually as a block on Sunday between Falcon X and Stone X. That was the first actual print. The first real trading day was Monday. They put up a combined 194 contracts. May not sound like a lot, and it isn't lighting the world on fire, but it's also not nothing. If you look at the big Bitcoin or some of the other contracts, Ether, they don't put up that much sometimes in a week. So that's actually decent volume, all things considered. Day two, we had 171 contracts combined out there. If you're a crypto head, you like talking notional, then the first day's worth of volume was a notional value of 98,250 Solana, aka about 12 million out there. So I'll leave it up to you whether you view that as a success or a failure. But Carly, in general, what are your thoughts on the first couple of trading days? Do you think this is a success, failure, or it's really still too soon to tell?
I think it's too soon to tell. We saw the exact same kind of very, very low volume on the launch of the other two crypto futures. And I'll also point out from a broker's standpoint, the crypto products are seen from a by most risk managers of FCMs. They're kind of seen as riskier products. In other words, There's no tangible or physical commodity backing it. It's just kind of an idea or a technological idea. Or, I mean, I'm not saying it's not valuable. I don't want to get people mad at me, but the reality is, like, there's no price limits or anything, and it trades over the weekend. So Bitcoin could go to zero overnight. I'm not saying it will. I'm just saying theoretically, from a risk manager's perspective, that's how they view these products. Unlike corn, that corn might go to zero, but at least there's something, as a collateral there. So the reason I bring that up is most brokerages aren't going to. In fact, I don't know of a single brokerage that offers day trading margin on crypto. So that alone, just the lack of day trading margin, is going to get you far less volume per contract. I mean, if you look at the E-mini S&P volume, a lot of that's people getting in and out 100 times a day or whatever they're doing. It's not people that are buying and holding forever. So they're just two different animals. And I suspect that's why the CME did the micro Solana that small, is they're hoping to get that day trading crowd without the day trading margins to get in and scalp. And maybe that's their goal. And if that's the case, I totally understand why they did it that way.
Now, listen, I'm sure you have some questions about these new contracts. Send them in. Not going to be the last time we talk about Solana or indeed crypto futures here on the show. But speaking of your questions, we'll get out of here now with a little bit of your futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, everybody. Welcome to your segment, the Futures Free-for-All. We got a question here. Interesting one from T-Cals. T-Cals wants to know, are those numbers you quoted on your Futures Rundown program the total for a product? He puts an example here, like if corn did a total of 200,000, I should say, contracts on a particular episode, are they for the total product or are they for the most active contract in that particular product complex? Thanks so much for the show. Well, you're welcome, T-Cals. It's a great question. We talked about this before. This is why we point out the month when we're talking about our most actives, right? Like you mentioned corn. I said corn came in number 11 today, so outside of our top 10, actually, with 173,000. But I also said that's the May corn contract, right? So that's obviously not the entirety of the corn complex. So I went and looked right now here in the short time we had in the transition here, listeners. I'm looking right now. So the May contract right around 175,000 contracts. And then we have July number 2, almost 100,000, about 93,000. September, 42,000. December actually looking spicy at 65,000. Then only about 5,000 for March of next year. And then it falls off a cliff from there. So if you add all that up, including obviously the most active contract, which is May, that gets you to around 350,000 total contracts for the corn complex, which is about the round number we expect. We expect usually around maybe 400,000 contracts in a decent day out there. So that's exactly what we're pointing out, just finding the most actives of each, and we're pointing them out for you. If you want to go add up the entirety of each comp, I guess we could do that, but that'd be a heck of a lot of volume to throw at the people every week, Carly. I don't know. I don't know if that's informative. What are your thoughts?
No, I think you're doing it right. I think using the front month is the most realistic and informational data point.
All right, we'll get out of here in a couple of our questions of the week that were interesting that I want to get your thoughts on. Our listeners have already weighed in on, Carly. First off, we had a poll recently. A lot of people were saying heading into the last couple of weeks, maybe this BTFD trade, is it finally dead? So we thought we'd ask you folks, hey, is BTFD dead? Again, we're talking about the equities here, listeners. You can make different arguments for metals or ags or whatever other product you want. And we gave you 3 choices. Yes, BTFD is dead, or no, you're buying more right now, or you're out, you're completely in cash. And nearly 42% of you, it was actually a very close race. 41.7% said, no, you're buying more right now. At least for right now, that is the winning trade, popping hard today. 37.5% saying, yes, the BTFD trade is dead. So very close at the end of the day. And then Carly, nearly 21% saying they're out. They're in cash, which is also kind of interesting because we do speak to a more hardcore audience. What are your thoughts on the whole BTFD trade? And then also the fact that so many people are in cash right now?
Well, for the sake of a healthy market, I hope the buy the dip trade is behind us, and not because I'm pessimistic or I want the market to go down and people to lose money, but it was very unhealthy the way that the market was trading, especially the concentration in 6 or 7 of the big stocks. And those things are unsustainable in the long run. I think it's better if we kind of work that out of the system, get back to a little bit of a reset, and then we can proceed with things like math and logic. I think we were just so far ahead of ourselves, a couple of months ago when we were at all-time highs, that I think we needed to clear that out. And so I'm hoping people pay more attention to not just the fact that the market's down a little bit, so I should just throw money at it, but maybe pay attention to the actual fundamentals and the reality of it. I'm going to be old and annoying, but I've seen this price action before. I saw it right before the financial crisis and right before the dot-com bubble popping. I'm not saying we get a repeat of that kind of horrific price action, but I am saying a healthy correction, maybe S&P somewhere around 5,000, maybe even dip into the 4,000s would be amazing to reset the system, get everyone on a more realistic level and, better footing. So.
Math and logic. Who has time for that, Carly? You have to BTFD. There's no time for math and logic. What kind of madness are you talking out there? A lot of our listeners had thoughts, including our resident humorist here, Mr. Vernon Griffin. He says the BTFD trade isn't dead. It's just ghosting us, like that one friend who still owes you money. So there you go. The markets are ghosting us all, Carly, out there. Well, if folks want to put some math and logic to work in their own trading, maybe they want to reach out to you to do that. Carly, where should they go? What should they do?
They can find us at DeCarleyTrading.com. I'm also on social media, X. You can find me at Carly Garner.
There you go. Give her a follow. Check her out over there at DeCarley Trading. And while you're checking her out, check out some of her books. If you're newer to this futures or futures options game, she's got Trading Commodity Options with Creativity, Higher Probability Commodity Trading, and a Trader's First book on commodities. For a lot of you, that might be a good starting point as you're first coming to grips with some of these products here on the Old Futures Rundown. That is going to do it for us on the network today. Back again tomorrow with our usual Thursday doubleheader. We got the option block with our friends over there at SIBO, followed by This Week in Futures Options with our friends over there at CME. Friday, of course, we come back to talk about all this madness in the vol landscape, and spoiler alert, there's a lot. I see you folks asking if I'm filled on some of my vol trades. I'll check that after the show. But stay tuned for a lot of vol talk on Friday with Carly's nemesis, Dr. Vix, and we'll see who else will join us on the program. Always a fun time. Will we have our old pal, Mr. Loggins, joining us this week in the Danger Zone? Doesn't seem like it, but we shall see. Anything can change. Friday is an eternity in this market. And then, of course, after that, one final time, exclusively for all of our pro friends out there, we come back for a little bit of fun with a little bit of options oddities. Check all that out if you want on the pro side, theoptionsinsider.com/pro. Then we're back again next week, all the way through to next Wednesday, another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.